Hello guys, it's Joe Rapisarda, and today I'm going to show you how to correctly calculate property tax, how much your property taxes are going to be based on the sales price of the home you're purchasing. Now, we use in mortgage lending, a lot of times is it just a general idea. We use 1.25% of the sales price and divide that by 12 months. That's an estimated tax amount. But each property can be different. They have what's called mello, roos, or bonds or assessments that can be different from property to property. So we have to look it up to be sure. So what we do is we go to Google here, and if you haven't already, click on the bottom right-hand corner. It'll open up into full screen, and we would write out for whatever county you're in, but we would write, I'm in Solano County, so Solano County property tax, okay? And then I'll just click on that, and then it'll go to right here to Solano County Tax Assessor. I'll click on that first one. It'll open up, and then I go down to here. You look on wherever it is for property taxes. I would click that in. Then you go here, property tax search. I would click that, and then go to property address because you don't know the other one. And let's just use an example that we already have worked up, 5340 Discovery, and we'll take that and we'll search that. Okay, so that's going to give it to you here. We'll view that account, 5340. And then once that's opened up, we will go on here to print statement. It'll tell us the breakdown. We could take a look at that. And let's see what that looks like. All right, so this is what it would be from here. Let's go back up there. Okay, and so we take a look at this. A common mistake that people make is that they go straight to this amount and go, oh, here's what the taxes are. Well, that's incorrect because these taxes are in the county recorder system, and they're based on the current owner's tax. And that was calculated by the sales price that the person originally bought the house from. But you or your buyer, depending where you're doing it, is going to have a new tax based on the sales price that they're buying. So you can't use this amount. It's incorrect. So what you want to do is look at these numbers here. All these numbers here, all the way through here in the middle column, they are all the factor that we're going to use. So in this case, the factor is here. It's on the bottom here of 1.05376. So we're going to multiply that 1.05376% times our sales price. And don't worry, in a minute, I'm going to show you this all on a piece of paper. You also got to look at whatever the fixed charges are. You see the fixed charges here? These fixed charges all here are, you have to add these in. These are the yearly amounts. So what you want to do is take your sales price times the fixed amount of, or excuse me, the factor of 1.053726, and then also add in these costs, which total around $5,000. So you're like, well, what does that mean? So let's take a look at what that would look at, excuse me. So we put that on a worksheet here. Let's say the person is buying this house for $768,000. So if they did that, we're going to use that factor that we just talked about in the last one, and I just rounded it off to two numbers, 1.05. And that's going to give us a yearly amount of $8,092. Then we're also going to take those costs that we showed, all those fixed costs that we looked at here, those fixed costs here, which is about $5,000, those are going to be, excuse me, those are going to be $5,231. So we're going to take that $8,000 plus the $5,231. That's going to give us $13,323, and that's going to give us a monthly tax on this property of $1,110. So that is what we did, and that's how you calculate the property taxes. So that may be more or less than the 1.25% divided by 12 that we had originally, but this is the way you know, and this is what the lenders will use as well. All right, reach out if you have any questions. Talk to you later.